Hello, everyone. This is Martin. It is now about 4 o'clock or just after 4 o'clock on Sunday evening, January the 24th. And this is a new updated video for the trading opportunities that I see ahead of ourselves for the upcoming week, January 25th to the 29th. First of all, I want to thank all of you for your inspirational messages and condolences. I mean, I can't believe it. You guys are fantastic. Not only for wishing me well with the after the passing of my father just recently, but at the same time for telling me your own personal stories. I mean, some of you have some amazing stories about loved ones who have passed away recently. So again, my heartfelt condolences to all of those people that did provide me some information about their own personal family lives. So again, kudos to all of you. You guys are what make this community of traders a really fantastic group of people, and I really appreciate that. So, with that said, let's get started with our first currency pair. Okay, we're starting off with the first currency pair. This is the Euro USD daily. I actually zoomed out to show you what's been happening since August. We basically started up here. We're making lower lows, again, lower lows, lower lows. So overall, the trend bias is mildly on the downside. The MACD just went below zero recently, and let's now zoom in a little bit closer. Okay, now we get to the portion of the price action that I'm interested in. Last week, you can see with the start of the red line, well, that designates the end of the previous week, which was the Friday of the previous week. The first candle after that it was a bearish candle, and again, there was a huge gap. It started up high, then came down to close the gap. You can see with this bearish candle. So this is what we're looking at, and for this week, what I see is the trend is sideways. We're still so far continuing to go sideways, but we did have a triangle breakout. Um, See, I've drawn in this trend line right here. So we've broken that down to the downside. And basically what I'm saying is wait and sell below once price reaches below 1.070, 1.070, which is right about there. So I know we're getting close to the support and next support level, but I believe there's still a little bit of room to the downside to at least to here. So, but if it gets down to here, it may just break right down below, and we'll see what happens. So, this is what I'm saying: wait or sell below. You can actually wait or sell below 1.070. You can even take a sell trade right now since we had a big bearish confident candle. You can try that. Your stop loss will be just above the 50 moving average right there. So not much of a huge risk. Your risk to reward will still be at least 1 to 1. Okay. And I just want to move just a second. Again, as always, I want to review what I did say last week, and this is what I mentioned last week. I mentioned that prior to the opening of the trading week, we were in a sideways trend, which we were, and uh, but I said I was thinking that possibly price would go higher. It actually did. Uh, but it did not really continue going higher. It actually stopped here at the next resistance area you can see with the gray rectangle. I did say buy limit order on the pullback, which would have been fantastic if you would have gotten right in there. So again, as price was going sideways, anticipating price that may go up to the next resistance, if you would have placed a sell limit order there, you would have gotten a fantastic entry and come down all the way down to here. So that would have been a huge winner for you. I did also mention watch for the resistance to pull back. I'm sorry, that was up here. So I'm sorry, I've got that backwards. When I said buy limit order on pullback, I meant if you would have taken a buy trade as price went down, and that's called a buy limit order, then you would have then it price would you would have made some good profits if price would have gone higher. However, that never happened. I've got the red star, the red X right there. But I did mention watch out for the resistance pullback, which means if price goes up higher, if you would have taken a limit, sell limit order here, you would have made some good profits. Okay, so sorry about the mix up in my words, but that's what I really meant to say. If you have any questions, email me, and I will be more than happy to verify what I just verify or clarify what I just said. Okay, so let's go on to the next currency. Okay, here we have the British Pound USD daily, and you can see just visually looking at the charts. This is again a daily chart, meaning that each candlestick here is a daily price movement. It's just keeps going down, down, down. However, recently over the last 3 days, it did turn positive, so prices started to reverse. Now, for last week, I mentioned price was at the 2009 low, which was right here. So last week, remember, this was the close of Friday, where the red line is here. So we had a huge bearish candle, and I said the price was at the 2009 low. In fact, we had broken the 2009 low, or I'm sorry, we were right at the 2009 low level. So price had stopped there on Friday, and I mentioned that price would most likely continue going down. It actually did for, let me just take a look. If you would have placed an order right there, a sell order, you would have made, well, at least 116 pips, waited a few more days, 158 pips, if you're looking to take some sort of profit. But it did go down, then it has reversed. And I also mentioned in last week's video, the overall sentiment was bearish, but sell after pullback. And that's another thing you could have done. Since on Friday, previous Friday, price closed right there. Okay, do you see that? Waiting for a pullback means waiting for price to come back to at least the 8 EMA, you see, which is that the 8 EMA, which is that blue line. So if you would have placed a sell limit order right there, and then your stop would have been just on the other side of the line, so very small risk with the potential of a huge reward. Taking sell limit right there, you would have made at least 184 pips. So these are some of the strategies that you've got to try. Don't be afraid to try it, especially if the risk is very low. And so in this case, taking a trade, a sell limit order right here, your risk would have been very low. Okay. And this week I'm saying the trend is down. We're still in an overall downtrend. Sell below the 141.89, which is right about there. Okay. So sell below the 141.89. If price goes down there, you can take a sell stop order. Or this might be a great idea. Just wait for counter trend trade above the 143.64. If you're going to be taking a counter trend trade just above there, then you've got a lot of room to the upside to at least there, which is the 144.70 level, good for about 105 pips, and even up to the next level for about 200 pips, up back to the previous 2015 low. Okay, so that's something that you can consider. You can wait and get ready to take a counter trend trade above the 143.64. Okay, now we get to our next pair, and let's take a look. This is the Australian USD daily. Last week, okay, right here, closing previous week on the red vertical line. You can see that right there. Had a huge bearish candle, just like the British pound. I did mention we could expect a downtrend to continue. It did go down a bit, but then reversed completely right away. And this was a huge false breakout. Okay, so I mean, price did go down, but then went up immediately. I did also say sell on a pullback, and the only chance for a pullback would have been the next day, the Monday. Um, or Tuesday, if you would have taken a sell limit order there, you still would have made a bit of a profit because price closed right there. And let's see what that would have done for you. taking sell limit order there, price close there, the top of the white candles, yeah, okay, 43 pips. Not great, but um, not bad. The risk to reward would have been just on the opposite side of the wick, so your risk would have been very minor for the reward that you did get. Now, for this week, I'm looking for the overall trend bias is still down. The MACD is below zero. You can see that right there. Okay, we have bounced off the a big, huge resistance area that's in the gray rectangle and also the 21 EMA. Okay, so that's why I'm saying trend bias is still down. What we can do is sell below 0.6950, which is right about there. Okay, so if you could place a sell stop order just at the 69.50, and your risk or your stop loss will be just on the other side of this tall wick right here of this doji candle, right? So that would be your risk, and if you're going to wait to take look for your first target, you want to at least take a 1-to-1. So if you enter a trade right there, a sell trade right there, and your risk is, let's say, 66 pips. So you're going to wait to close your trade once it gets down to just above this gray rectangle, which is support. Okay, that's what you want to do there. Okay, so the other thing is look for a counter trend trade. We're going to talk a lot more about counter trend trades. I'll get into more detailed information in the very, very near future and why I'm calling for that. But if what you can do is look for a counter trend trade above the 70.50 area, which is right there. So if price reverses, continues higher, and closes above the 21 moving average, then most likely price is going to head higher, and these are your next areas. Okay, so you could be looking at your first target would be there. Another target would be right about there. Okay, so if price goes higher, price could come up to here. Price then could come up even further. So if you are taking counter trend trade, you want to target your first target here at this area. Then remove half off the table, half of your profits off the table. Move your stop loss to just below that, and let your trade run. If it runs higher, it may come all the way up to here or even a little bit lower. See, this is the 100 moving average. You can see this dash line. So that's where you would let the second part of the trade run for more profits. Okay. Again, that's only if you're taking a counter trend trade. Otherwise, look for a sell trade opportunity below this bottom wick of this candle. Okay, now we get to the we get to the New Zealand USD, and with this one, again, previous Friday, it closed with a bit of it did not close below the support area here. Okay. However, on the next trading day, Sunday, Monday, it gapped. It started really down low and gapped all the way up to close the gap. And then it went down again. And so basically sideways. And then we had a pin bar, which is a great opportunity and a good clue that price was going to continue going higher, and actually did with this huge white bullish candle. Okay, so last week I did say look for a downtrend continuation. I did start down. Okay, like price closed here on the Friday. Okay, so if you would have taken uh, well, you're looking for evidence, first of all, for the downtrend to continue. We did not get it on the first trading day. On the second trading day, we kind of did. But again, if you would have opened a trade right there at the open of this black bearish candle, um, again, if you would have waited to the end of the next day, you would have lost a bit, and then I would have gotten out of the trade. So it wouldn't really have worked out. The other thing I mentioned is sell on a pullback, and price did actually come back here. And this is really important. When I talk about pullbacks, I'm talking about the first line of resistance. If price is pulling back higher, and after the Friday here, the next trading day, we had an up day, and it did not quite come up to the 8 EMA. But take a look at this candle here. If you would have had a, let's say, a sell limit order up around here, price would have come all the way back up. It would have hit your sell limit, and you would have made the profits from here all the way down to the close of that candle. That would have been good for approximately 94 pips. Not bad, especially if you're just trading day by day, okay? If you would have waited to the next day, some of those profits with this up candle would have been, you would have lost some of those profits, but you still would be in profit. And at that point, I probably would have had a stop loss just above there, moved my stop loss just to above there, and if price went higher, which it did the next day, then you would have been out with a very small profit. But you know, that's the way trading goes. This week, we're still in a downtrend. Okay, we're in a downtrend until price gets above here and here. Price has to go much higher for us to say that we are in an uptrend. So right now we're still in a downtrend. Prices, the MACD, I'm sorry, is below zero here. And my suggestion is sell. You can sell right now. Um, Price is almost, let me just zoom that in. Price is right at the 8 EMA. What you could do is wait for the best thing probably is to sell below 64.58, which is right about there. Okay, so right below the wick of that black bearish candle. If you sell there, your first profit target will be down here somewhere. Okay, let me get rid of some of these lines. Okay. So your first profit target then would be probably about there, okay, about there, and then your next profit, if it goes past that, price could probably come down to about here, possibly down even lower. Okay, so that's what I see here. We're basically looking at taking a sell trade, sell below 64.58. Okay, if you want to be on the safe side. I mean, if you take a sell trade right now, we're right at the 8, so I would just have a bit of a caution. Just wait for price to go down a wee bit lower. And now we get into the US CAD. Okay, now this is the US dollar has been on a tear. Basically, over the last little while, the US dollar has been the strongest currency over all the other currencies. The Canadian dollar has been the weakest, and you can see Canadian dollar has just. Um, However, having said that the U.S. dollar is the strongest, we are in a very strong pullback for the U.S. dollar versus the Canadian dollar. And you can see I've drawn in a short-term trend line with this magenta line. Price has actually broken the trend line, which kind of indicates that price, and also price is broken below the 21 moving average. So this indicates to me that we are in a counter trend position where we can pretty well take a counter trend trade and then look at uh, looking at our first profit target level around here. Okay, right there. Price may even come down lower to meet with this trend line down in this area right here. Okay, so there's a lot of room for movement, and basically we're looking at least 190 pips or more, maybe as much as 250, 290 pips in total, right? That's a pretty good case for taking a counter trend trade. If we do, your stop loss would be just above the 21 EMA. Okay, that's aggressive. If you want to have a conservative stop loss, just above the wick of this black bearish candle. Okay, so that's what I would do. That the even though the trend bias is up, I'm saying that if you want to take a counter trend trade, and again, these are other options available to you, other strategies. You don't always have to wait to take a buy trade in an uptrend, but you can take a counter trend trade. The evidence, well, at least the technical evidence is making a case for a counter trend trade. You can see the MACD, the histo bars are losing momentum. That means the upside is losing momentum, and the trend is losing strength. That's what that means. That's what these histobar means. The histobars are also lower than the signal line. You see the dashed red line. So it looks like the MACD will be coming down, 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 and that's why I'm basically saying that there's a good case for a counter trend trade with a minimal risk. The reward profit target potential is pretty large, at least 2 to 1, maybe as much as 3 to 1. Okay, and or you could take a sell limit, and here's another idea: wait for price to come back just a wee bit, take a sell limit order 140 140 to 140 150 in that area, which means price would come up just a wee bit. You can park a sell limit order right there, and then hopefully catch price at even a better risk to reward. What that again means is if you catch if you have a sell limit order right there at the 140 140, okay, right, let's say right there where that line is, then your aggressive stop loss would be just above the 21 EMA. So again, very small risk, or above the high of that candle. Okay, so you are reducing your risk when you do take a sell limit order, expecting price to come up first, a little higher before eventually, and expecting price to go down. Okay, so that's what I see for the US CAD. Now we're going to jump to the US Swiss franc, and this one's interesting because it's now broken out of the triangle here. You can see that we were in a sideways movement. I mentioned a couple of times that price was moving sideways. We're in a triangle consolidation. Price has actually moved not only above the upper trend line, but above the resistance area, and with the gray rectangle, and with a good, huge momentum candle. Okay, that's great. Now that usually means that price is going to continue going higher. However, you could wait for a slight retracement. So you wait for a pullback and have a buy limit order, and in this case, you can park a buy limit order right around there, okay, at that level, okay, and or just take a buy trade right now. I mean, it's really up to you. Again, your risk and your stop loss would be just below the gray rectangle, which is support, or more of a conservative below this huge white candle. Okay, somewhere right about there. So that's where your stop loss would be. Last week I did say we were in a triangle consolidation. Just wait for a breakout, which and you can see that it did. Okay, so MACD is above zero. And the histo bars are getting larger. Okay, I'll just zoom in on that so you can see. You can see the histo bars are rising. They're getting taller. They are above the red signal, which means that the momentum for an uptrend is increasing. Okay, again, you can wait for a slight pullback, have a buy limit order, getting ready for price to bounce back to your designated level that you want to trade, and therefore getting a better risk to reward, because now if you your risk would be now only to here, instead of waiting for a price to go higher, and then your risk would be lower. So anyways, these are all different strategies. I'm just giving you some heads up on what you can do, and continuing, we are now on the US Japanese pair. Last week I said we were in a downtrend continuation. It didn't really happen. I mean, price did eventually go down a bit, but it just bounced back up. So, like some of the other pairs, they are reversing, and the only good thing that you could have done is I did say sell on rally, uh, which means if price comes back down low, okay, then I'm sorry, if price goes up higher. So what we mean is we want to wait for price to go higher, at least to the 8 EMA. It actually did with this candle on Tuesday. And if you would have had a sell limit order there, you would have made some really good profits. If you would have had a sell limit, you would have waited for this candle. It closed right here. So the profit would have been approximately 80 pips. However, some people actually put in profit target levels, and if you would have profit target of right about there, then you would have made about 95 pips, 100 pips or so. Okay. This week I see we are still in an overall downtrend. That's the overall bias. See, the MACD is below zero. However, you can see that the histo bars are rising, which means the downtrend is losing steam. The histo bars are above the red signal line right here, and price has really gone up with two strong candles. Here's an engulfing bullish candle, went and closed right above the 8. That would have given you a signal for a counter trend trade. Another huge bullish candle that which closed above the 21 and above the previous resistance, again giving us all further indication that price is going to continue higher. So again, counter trend trade buy above the 118.88. You can see that right here, and your first profit target area would be somewhere right about there. Whoop, let me just do that. Okay. So that's your first profit target area. Your second profit target would be down just below the resistance area of this gray rectangle. So again, lots of upside potential, at least 100 pips or more. And your stop loss would be, your aggressive stop loss would be just below this gray rectangle right there. Okay. Actually, your stop loss probably should be right about there. Okay, and then more of a conservative stop loss just below this white bullish candle, just below the wick of that. So great opportunities for this week, mostly counter trend trades. If you have any questions about counter trend trading, please shoot me an email, and I'll be I'm more than happy to help you out on that. We're going to talk more about counter trend trades in the near future, but I'm just giving you a taste of what can be done, and you can add to your other strategies. And finally, one last thing, there are two other really good opportunities, two other pairs that we normally don't cover, but I'm going to talk about the Canadian Japanese um, pair. This is a daily chart. Great opportunity for a counter trend trade. Okay, you could take one right now or wait for a slight pullback. But here's the opportunity. Take a trade, a buy trade. It can go all the way up to here, which is good for about 200 pips. That would be your first profit target area. Okay, and as price is going up, this may be coming down a bit too. So this is a great buy opportunity. Your stop loss, your conservative stop loss would be right around there. Okay, and your conservative stop loss will be just below the low of this huge bullish candle. This is the Canadian Japanese pair. So there's a great opportunity. And I do want to show you one more. This is the Euro CAD daily. Okay, again, notice that the last two pairs include the Canadian dollar. So Canadian dollar apparently has been one of the strongest currencies over the last few days, last week. And euro is falling against the Canadian dollar. Here's another great opportunity for a counter trend trade to the sell side. So again, the very first opportunity, first target area would most likely be around here. and then down to about here, okay, where where the 50 is moving up to meet with the support area. So if you take a sell trade right now, um, your stop loss would be just above this magenta line, and that is the 154.56 area, just above there, or above the 21 moving average. Okay, so that's where your stop losses would be. And your first target's here, second target around here, a little bit lower. Remember, this is the 100 moving average. So there's a lot of, this whole area is consolidating, and it looks like it's going to be another huge support zone right here. So price most likely will come down further. You may also want to wait for a slight retracement. Okay, wait for a slight retracement to here before taking a sell limit order. So it's up to you, okay? So wait for retracement, then sell limit order, or just take a sell trade and see what happens. Again, your risk is not that great. So these are two extra pairs. We're going to be covering more extra pairs in the future as I see the opportunities arise. Hopefully you've gotten a lot of information from this video. And again, once again, thanks for all your kind words and sentiments. Love you guys, and we'll talk to you again soon. Bye for now.